Welcome back, everyone. This is Thomas Triple T Toy with another new bullish crypto analysis. Before we dig in and take a look at the Bitcoin's weekly analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, when you feel value has been added, or if you want to help out and spread my analysis to other people, especially newer people, so they can get so they can get more informed and then make more informed decisions. That would be very, very appreciated. So let's dig into the news first, and then we'll take a look at the charts and analysis. If you notice, I looked a little burnt today, or I'm looking a little burnt today, and that's because I spent like I think for 8 hours in the sun in the last couple of days. So yeah, a little burnt. By the way, as the summer progresses, or during the spring and summer and fall, you probably notice me getting darker and darker. So you'll be able to see some fun tan on my face. All right, let's dig in to the news. According to Daily Hodl, there's an article titled "The Boom and the Bust Days of Bitcoin BTC Are Over," according to Fidelity Macro Analysis, and here's why. So basically, this article talked about so this investment firm, $3.3 trillion investment firm. It's they would know what they're doing, and Fidelity is a huge company, and they're one of the few traditional financial companies that got into crypto early. So good for them. They probably know their stuff. So, anyways, in this in Jurian Timmer, he on his Twitter account he shared that until recently, Bitcoin would often overshoot its intrinsic value to the upside during bull markets and to the downside during the bear markets. It was a momentum game with little to no resistance until the trend reached exhaustion. And basically, he's saying that due to traditional finance company and institutions getting into Bitcoin, it's going to help stabilize Bitcoin, and it will prevent huge run-ups and huge drawdowns. And in a way, I agree with him. I don't think we're going to see those, like 1,000% or 5,000% increases, or even like 300% increases. I think as more adoptions come into the crypto market and especially Bitcoin, I think, and also the people hodling and not selling, I think it's gonna keep price more constant. That is, it's kind of funny to say that in the crypto space, but yeah, it's gonna reduce the volatility, and over time, Bitcoin is gonna become more like, at least in the midterm, more like a tech stock to me. It's gonna not have such gigantic volatilities, but it'll have some volatility, but just not as much. And so give this a read. He dives into stock to flow and all that stuff. Stock to flow, like I think it works in early on, but yeah, I don't think it's a good model. It doesn't address demand. It only addresses supply side, and it's missing the other half. According to Cointelegraph, this article here, Bitcoin funding rates show demand to short BTC as 40K becomes resistance. So basically, this article talks about the market participants based on the funding rate, and they're having more tendencies to short Bitcoin, and that's true. That's true. And Bitcoin has been dropping, and so they're seeing potential there. And we'll take a look at high leverage positions in a few minutes here. So give this a read if you want to, but that's all. That's basically what it says. This is an interesting article, from the bitcoinist.com. It's titled, "Is MicroStrategy Secretly Selling Off Their BTC Stash?" And this person, Oz, CEO of Altcoin, anytime I see someone put CEO of something, I am always curious about, you know, like the type of personalities that person is. Like, do they really need to tell people they're a CEO of some like altcoin or whatever? You know, I mean, like for public companies, I totally can understand why, due to certain obligations and regulatory stuff. But anyways, this person shared on Twitter. They realized that MicroStrategy has been selling Bitcoin without telling no one. Blah 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 blah. Anyways, this article did a really good job of digging into this claim, and they pretty much discredited it. And this person shared about how they looked at the address for MicroStrategy, and then the amount of money that's in there and how things have moved. And anyways, long story short, this article dug into it and found out that address doesn't really match up with the purchase, the timing of purchases from MicroStrategy. So yeah, be careful what you read out there. Do your own research is the best way to find things out. Just don't trust people on blind faith. So anyways, good article. Great job from this author here. I'm not going to even try to pronounce his first name. Ibrahim is the last name. So check that out. It was posted a day ago. Let's take a look at the crypto market heat map here. Blood red. I think worse than this morning. So tough day. Bitcoin 38.9. Dropped us. I think it was like dropped lower than this earlier. Dominance 41.26%. Ethereum 2.8. You notice how it dropped past. It's been hanging at roughly 3K for a while, but finally dropped below that. Dropped 2.74. Dominance 19.717. Luna is at 88.36, down just over 3%. And it's bad day. Crypto market cap, we see market cap 1.80 trillion. That's down. I mean, that's down pretty bad. It was like 1.7, 1.6. Now it's 1.8. So you can see outflow of money out of the crypto market. And it's Sunday, so Sundays can be very volatile, as people, perhaps like today, they're de-risking and they're looking at the futures market for stocks, and they're seeing negative, or they're in a position where they need to take money out of crypto, and that's what's happening. Here you can see Bitcoin, current market cap, $740.7 billion still. So yeah, that's a big drop. Let's get to the trading view chart here. This is the weekly chart, and last week we were on this candle right here I think when I did it, it was on this candle, and then we were predicting this candle here, and then this one's new because I did it in the later afternoon, or well, it's evening now in Pacific Standard Time. But anyway, so it printed two more bearish weekly candles. As you can see, it's dropping, descending, and it's got a bigger body here, smaller body here, small tiny body here. But this body here of this candle is getting bigger than this. So usually if it goes here, it's losing selling momentum, but it's picking it up back here again. And we'll look at momentum in a second. So descending, and it dropped below the last week on the last Sunday's analysis. I mentioned that if the weekly candle dropped below the ascending, I said the indicators show that it's likely to drop below the ascending triangle support, or the ascending triangle support here, or the it's also shared with the ascending channel resistance. But anyways, if the indicator showed a strong possibility of dropping below here, it did do that. It dropped right below, and then now the new candle dropped below again. And so pretty cool prediction there. Today it wicked down as low as 38.8, and then it bounced back up to 39 roughly, and I think, let's see, where is that now? Yeah, it's currently at like 39.1 right now. Bitcoin remains bearish, so that's 5 weekly candles that's trending down, and not only that, but it's below the bull market support band. This gray ribbon here, still below, and that bull market support band is roughly around 41.8k to 42.9k. So 41.8, 42.9 here, and it's below that. It's also below, and that's a descending pattern. And the 50-day moving average is also descending, and that's at 44.7. And when you have descending indicators, if you or a pattern here, when you have descending patterns like that, it can put pressure on the price, because it creates resistance, and price have to break that resistance to get over it. So keep an eye on that. Let's see what else here. This ascending triangle, ascending channel support was such a critical support, and it broke through that, and it didn't come back up. So that's very bearish. Currently, if you notice here, this red horizontal line here, that's the highest volume traded price level. So at this price level, right around here, which is roughly 38.5 or so, right around there is the highest volume traded. Going back to roughly April of 2021. So that's a lot of data. So we're within that range of the most traded volume for that price level. The next major support is right here at 37.5. Okay, that also happens to be the new FOMO level at 15%, not financial advice. And so that's the next major support, and the major resistance will be this ascending support here. It's now resistance, and after that would be this 41k. No, wait, is that? Yeah, that's 41k resistance here. So that's where we are at. As far as the Bollinger Band, it's below the middle basis of the Bollinger Band, and that middle basis is 41.8k. Let's see, what else do we have here? Yeah, volume. As far as daily volume, you can see here it's below the moving average for, I believe, 7 of the last 8 weeks have been below the moving average. That's not a lot of volume there. As far as the KDJ, the white J line of the KDJ dropped further to 17 below the red signal, the blue K and the red D lines, and that's strange. This doesn't look right. 18, 17. Yeah, so these numbers are not right. I'm gonna erase them instead of. That's probably from the daily chart. Yeah, there we go. The 17 is correct. It was 17. As far as so that's bearish, and notice that it's the 20 mark is the start of the bottom range for KDJ. So it's got a bit of ways to go. You can see down over here, it got as low as -5. Over here, it got as low as -1.2. So it's got some ways to drop before it bounces back up. For the MACD, the white MACD line dropped below the red signal line to it was -1,909, just under the red signal line there, and it printed its second consecutive very thin bearish histogram bar, and you know it's so thin that it could go either way any day now. So just really odd pattern here. You don't see going back like to April of 2021. You don't see that kind of pattern like consecutively. So strange. So anyways, I gave it a bear, but it could be like a bear and a crab if you want it. Let's go down to the KDJ. So let's go down to the RSI. RSI is red, CVD is blue, and momentum indicator is white. The RSI line is the RSI line is at 43. I gave that and it's trending down. I think I'm missing something there. Yeah, there we go. I knew I missed something. I script all this stuff up. I type them up in advance. But sometimes I copy and paste and I don't copy everything. That's not the right one. I need to. Here we go. There, that's right. So the white, let me move this over so we have some room. Oh, that's not the one I want to move over. That's not it. So frustrating. Okay. So the RSI and CVD trended down. So RSI is red, CVD is blue. They both are trending down slightly. RSI is at 43. Gave that a bear and a crab because it's trending down. But it's more sideways, somewhat sideways. The blue CVD line is at 4.009 million, and I gave that a bear and a crab too. The white momentum indicator, this white line here, it's curving back up though, but momentum just because it's curving back up doesn't mean that it's bullish momentum. In this case, curving back up means that it's increasing bearish momentum. So we gotta be really careful about momentum there. So we got a bear here, and it was at negative 0.00082. Also important down here is the spot to derivative basis delta. That remains, I put spot to derivative delta in here instead. Hang on, I'm going to change that. Yeah, that it has its own section. But in the my Twitter, I put it all together. So that's going to change there. Okay, spot to derivative delta, blah, blah, negative 1.7044 weeks. Okay, there we go. Sorry about that. So spot to derivative basis delta has been negative for 4 weeks in a row. It's currently at there we go. It's currently at negative 0.000382%. So when this is negative like this, you can see over here and over here, that's when price drop or stay pretty bearish. See that? And this is critical. If we want to go bull, this has to pop back positive again. I did a whole video on it. It's on YouTube. Okay, let me save all this stuff. So overall, my summary would be this one needs the word summary in there. There was a double the. Okay. Wow, that's a lot of mistakes. Okay, so summary. If BTC sustains a break below the strong 37.5K support, that's extremely bearish. If it breaks back above the ascending support, this ascending support here, that's I think it's, man, am I out of it? The sun must have fried my brain or something, guys. Support, if it breaks back above the support, ascending support, actually resistance support. Goodness gracious. Okay. So let's do the summary again. If BTC sustains a break below the strong 37.5 support, that's extremely bearish unless it breaks back above the ascending ascending support slash resistance. That's more bullish. More likely, BTC is gonna chop sideways in this area. It's gonna chop sideways around this red horizontal line here, which is the most volume traded price level. So that's where it's gonna be. But you want to keep it. You want to prepare for both moves, moving down and moving up. Speaking of moving down, here are the revised entries. That's for edutainment only. FOMO, new FOMO level is 37.5K, 15%, 35K, 20%, 32K, 30%, 30K, 25%, and 25K at 10%. Remember, low levels, if you put reserve money for it, if it doesn't take, you still have dry powder. Remember that. Dry powder is important. But it's up to you. Everyone's different. All right, let me save that before I lose it. And then we'll move to the analysis. Here we go. Okay. Okay. That's a lot. All right. As far as max pain, options max pain, it's going to go 25th is going to be 40K, 26th is going to be 39K, 29th is going to be 42K. This 42K has been the same for days. So it's a very strong indicator here. But it's curious because Bitcoin's at 39 right now. Think about that for a second. May the 6th, it'll be 40K. And let's take a look at the volume and open interest by expirations here. So volume is our contracts that have been negotiated and are pretty much done. Open interest are contracts that are still pending and not finished yet. So over here, what we're interested in, it's good to look at volume and see, how, on certain days, if there were more puts or calls. Calls are the options but not obligations to buy, and puts are options but not obligations to sell. So if you buy a sell contract, and price drops, you can sell at whatever price you bought it at. So it's and the opposite happens for calls. Calls are the options to buy at a certain price. So if, let's say, Bitcoin skyrocketed and you had an option to buy Bitcoin at like 40 and it skyrocketed to 50, hey, that's good for you, right? All right, so you can take a look at this. I'm not going to go into it. This video is too long already. But the one day we want to be concerned with is right here, open interest on the 29th. More calls here than puts. But this one has a pretty decent amount of open interest. So when the open interest is higher, max pain tends to move towards that direction. And so 42K on the 29th, that's something to keep in mind. Let's take a look at the heat map here. This is a zoomed in view, so you can see what it looks like. You can see the major drop here, chopping sideways. Drop here, went back up, chop sideways, big drop here, and this is not an organic drop. That's this is a big sell-off here. And so gives you an idea. But let's zoom out and take a look at sell walls and buy walls. Sell walls, we have 50K here. Buy walls below, we have, notice how this is getting denser at the very near the bottom of the current range, current price level. It's coming in here. There are more buy orders here, and this spoof wall here is here. Spoof wall here is trying to push it up, give it support to drop, to prevent it from dropping further. So we got 37K coming in bigger, 35K, 30K, 25K, 20K. And the CVD here is showing aggressive sells here, but not extreme aggressive sells. It's just like a third of the way aggressive sell. And aggressive sells are people selling at market price, not limit sells, which are pre-planned in advance, like set a price and wait. Let's go to the liquidations level map. Cumulative liquidation levels delta is currently negative $3.7 billion on Binance alone. And this is for only 25 to 100 high leverage, crazy leverage positions. And what does this mean? This means that if you take the short levels up here and you take the open interest in them, the money in them, and you minus the long levels down here and the money in them, you get this $3.7 billion in shorts. So right now, what that just says that there are a lot more money going short on Bitcoin than 3.7 billion estimated. So do with that what you will. At this price here, it needs to get larger before someone could potentially take an opposing position on the long, high leverage opposing position, counter position to try to move price back up quickly. So not yet. And we're back to the beginning. Oh man, I think I'm just exhausted. So anyways, I appreciate your time. Feel free to smash the like, ring my bell, hit subscribe, and share, and help promote the video so other people can get more informed and easier to digest analysis instead of using a bunch of jargons and all these things that people don't even understand. So I would appreciate it. And I have one more video to do, and that's I believe it's the Near Protocol weekly analysis, and that'll be my last one. I'm kind of exhausted. So thanks. I'll see you in the next video, and then tomorrow as well. Peace.